Key inflation data coming in line with expectations. Traders are getting some reassurance that the Fed could potentially cut rates later this year. About 50% of traders are pricing in a rate cut in September. That's up about 1% prior to the report's release. So we didn't see too much of a change here, at least yet. We want to bring in Matt Stucky. He is Northwestern Mutual Wealth Management's Chief Portfolio Manager. Matt, it's great to have you here. So when you take a look, let's just first start with the market's reaction to this print. You've got CPI coming in line with expectations, retail sales coming in weaker than expected. We are seeing some gains here ahead of the open. How are you looking at this move higher?
Oh, good morning. Thanks for having me. In terms of the market reaction, I think this is a pretty clear indication that the market's reacting to this as a across the board soft print as you look at both the CPI print as well as the retail sales. And really the clearest way you can look at that is the September rate cut odds. Going into today, you kind of had the market pricing in one cut, maybe a small percentage chance of a second rate cut, but now we're kind of pricing in two cuts now. And that has implications for markets. It tends to lift equity prices as you've discussed already, but it also has style implications. And small caps, as was just mentioned, is one of those beneficiaries of real rates moving lower. And so we expect that to play out today in the market.
Matt, what's also interesting here is, I mean, at least on a basis points level, it looks like there's a significant jump in the percentage or the probability of a rate cut coming in July as well. I thought July was totally off the table here, but coming into this, according to the CME FedWatch tool, just yesterday, we were sitting at about a 26% chance of a rate cut. That's jumped to about 32.5. Now, sure, that's not the outsized opinion, but it still means that this could be lingering out there in the market. To what extent are you looking at a July versus September being that first cut?
Well, I think we got to really watch the labor market as well as retail sales to give us an indication whether or not that probability that jumped about a tenth or so is going to continue to move higher. And what I mean by that is retail sales tend to lead CPI by a couple of months. So if this weakness that we saw in retail sales of the consumer pulling back a little bit were to continue into the month of May and June when we get those reports, July may very well be on the table if that trend were to continue. But our view is not to overreact too much to the data on a monthly basis. If you look at the 3-month annualized trends, there is a story to say that the consumer is pulling back though. So if this continues, July may be on the table, but right now we don't want to overreact to just 1 week retail sales report. When we look at the prior 2 months ahead of this report today, they were fairly strong. And so there is some volatility in the data that we have to respect here.